Good morning, everybody. Hey, welcome to Wednesday, July 19th. Hope your week's going well. Yesterday, not a bad day. We bounced back pretty well, had some great gains yesterday on both the S&P 500, the NASDAQ, and the Dow Industrial 30. We'll talk about that and more when Dave joins us here in just a few minutes. We also have some banks coming in today, some more banks coming in today. We'll talk about their earnings too. But don't forget that there are so many things that we cannot control in this world we live in. However, you can control the amount of risk you have in your current portfolio. You need to know a couple of things, though. You need to know how much risk you really do have in your portfolio. And then you need to know how it measures up with the amount of risk you should have based on your age, how close you are to retirement, and your overall risk tolerance. These are all things that are accomplished through our core retirement design. Give us a call at 863-382-0037 to schedule your core retirement design. With that, we've got Dave coming up next.
Based on the housing information we got this morning, if you got a love shack, put it up for sale. Somebody wants to buy it. It's 8:41 now, 19 before 9. We always do check in on your money and see how Wall Street's treating you this time of the day. And on the phone, we have Phillip Statler from Statler Financial Services with us to flesh out the details. Phillip, your love shack isn't for sale either, is it?
No, absolutely not, man. Holding on to it.
We were talking beforehand, talking about the housing starts, and I was saying that they were kind of a pleasant surprise from the standpoint of a healthy economy. And I still think it's largely because you can't find a modest-sized home for sale in existing housing for these days. So a whole lot of people are ending up just saying, heck with it, and building them. And that was kind of what the data seems to indicate, doesn't it?
It does. It does seem to indicate that we are seeing those type of things happen. But still, and slightly better than expected, I guess you'd say, kind of. But it is falling down a little bit, right?
Yep. No, it is falling. Starting out the government data dump this morning, because that kind of led into it because I played the right record beforehand. We were expecting June housing starts to fall by the better part of 10%. They ended up falling by only 8% last month. Building permits did fall more than expected, down 3.7%. They were only expecting about a 0.2% drop. And you and I have been talking about the notion that we have to see, in order to discourage the Federal Reserve from raising interest rates next week, is we need to see the economy slowing down. And at least that's half a loaf out of the housing information we got this morning, isn't it?
It is. It is indicating that we are seeing a slowdown in the housing market. And so I think that, from the numbers, at least we've seen so far this month, if you and I were on the Federal Reserve, we'd say, let's hold off another meeting and see what happens, because the numbers are doing what we want them to do, meaning that the interest rate hikes that we've thrown at everybody are finally starting to work. Let's give them some more time. And I doubt that's what the Fed will do, but that's what they should do.
My instinct for the green eye shade side of the fence is exactly the same thing. I mean, okay, maybe, just maybe, for the first time in their lives, the Federal Reserve hit the sweet spot in terms of tightening up the economy, because we're tapping the brakes, we're slowing down, but we aren't going into a Volcker-style recession like we had in the early 80s, and that's kind of sort of what they want to do. But it's almost like they're waiting. I really want to burn some rubber here, so let's just clamp the brakes down hard and see what happens. The wolves, they aren't hawks. They're wolves on the board right now.
Yeah, we got another week to see what happens.
And I'm not a loose money fan to begin with, but I do believe very heavily that we actually do have the Congress actually tapping the brakes a little bit on spending, and that's the fiscal side of the fence. Now the Fed can actually do what it's supposed to be doing, and doing monetary policy, and it sounds to me like they actually have done a pretty good job so far. Now let's see if they don't overcook the books. Backing up to yesterday, and you and I were both kind of noodling through the reports that we had, the economic reports that we've had, really haven't indicated a reason for party time. But boy, do we have a good day. The Dow was up more than a full percent, up 367 points yesterday. Standard & Poor's was up by 0.7%, up 32. NASDAQ up 0.75%, up 109, and the Russell was up 1.25%, up almost 25 yesterday. I was looking through there before I got you on the phone this morning. I said, what the Sam Hill prompted the party? Because I couldn't find it.
Yeah, I didn't see anything either, Dave. And so who knows what really, one thing that I will say, and we see this at the top of every market, and it's called the fear of missing out. We see the FOMO approach happening here, and that could be an explanation for what's happening, because we've had a couple good days this week. And so people start to think, well, I'm missing this rally. I got to jump in now. And that's just going to force prices up. Now, you were saying before we went on the air that, those PE ratios are getting a little top heavy.
Well, yeah, with the major companies in the country, by and large, doing what they said they were going to do. They're meeting or beating the street more often than not. But still, the absolute numbers are expected to be about 7% down from last year. The price-earnings ratio on the Standard & Poor's 500, trailing again. Now, this is not the forward-looking one, but this is the trailing PE ratio on the S&P 500. This morning is 25.11. It used to be pretty steady around the 21 number, and I told the story a while ago that I used to have standing orders from my broker to get me into bonds if the S&P PE ratio got above 21. Well, now we're up at 25, and that just indicates to me that we're looking at not a bubble. I mean, it's not obscene, but we're definitely toward the top end of the range as far as a reasonable price value on the stock market. There's no reason to go down because we're doing what we said we were going to do. But if I were a macro guy, I'd be calling for a plateau right now, not another bull market.
Yeah, exactly. And so you wouldn't be buying here, would you?
I'd be holding. I wouldn't be selling necessarily, but that my own personal theories are that we're heading for a plateau right now. I'll be perfectly happy if we go up 5 or 6% on the indexes this year. That's fair growth, but there's not in a time of declining absolute profits is this necessarily, at least in my mind anyway, the time to go out on a limb and start using my gambling money to put it into more equities.
Yeah, exactly. It's and nobody knows, right? I mean, it's the market. It has its mind of its own, and we can use logic all we want, and it doesn't work when we're talking about the stock market.
It has a mind of its own, and sometimes no mind at all. Talking about reports, an indication of things that are on the horizon. Evidently, a lot of people are looking at and saying, I'm not going to trade all that terribly much. Boy, did Goldman Sachs have a rough quarter, huh?
Goldman Sachs did have a rough quarter. They missed on earnings by about 10 cents a share. They came in at 308. They're expected to come in at 318. Revenue was basically in line with expectations. They are trading down right now, about 1.6%. And this number in their report really kind of caught my attention. And you and I have been talking about absolute numbers. Mm-hmm. Their second quarter profit fell 58% from previous quarters.
Crapola.
So now, obviously, they've had some. Obviously, mergers and acquisitions are down. Trading revenue is actually, they are expecting a 25% decline in their trading revenue in the upcoming quarter. They had a couple other issues this last quarter. They had a what they call a green sky deal. It was a company I think they had that basically is the sale of that. And I don't think they made, that was an issue there. Commercial real estate, they've had some write downs there that are affecting them. And so that's all leading to the decline in their profit margins. Talking about write downs of commercial properties, I saw this hit my ticker as well. Starwood, office complex real estate mogul, defaulted on $2.2 million office tower in Atlanta. You and I have been blowing that horn on commercial real estate for a long time now, saying that there's a bruising we're cruising for there. Exactly, and so that's the first one I've seen that's really hit the headline. But I suspect there'll be more to come.
Okay. Talking about Goldman and banking in general, I've got a chart here that came out on one of my tip sheets. Global investment banking revenue in general. This is just the full picture of the entire industry from quarter two of 2021, taking the second half of 2021, compare it to the first half of 2023. Total global investment banking revenue is down by over 50%. We simply are not making as many deals as we were. I haven't looked at the volume numbers on Wall Street. Have they really fallen off much?
I don't. It just depends on it's hard to really say because you look at the days of the week and it can be a little bit hard to determine what it is year over year.
Okay.
From that standpoint, but
struck me as just a precipitous decline in less than a year and a half.
Well, yeah, I mean that kind of leads to Interactive Brokers, right? They reported earnings as well, and they missed. They missed by about 8 cents a share, came in at $1.32. So that was another brokerage firm that has missed, and that's going to be trading and that kind of stuff. They're down 5% this morning.
Wow. I got a whole pile of companies due to report today, and I can't tell which are before and which are after the close of the markets today. So I'm going to let you drive the truck. What else have you found?
So we got a couple other banks that reported, right? U.S. Bank Corporation, they reported their results. They came in basically as expected at $1.12. Revenue was kind of right in line with what was expected as well. They're up about 0.5% today. The Western Alliance, which is another regional bank, they missed by about 2 cents a share. Revenue was actually above expectations by a little bit. They're down 3.75%. So that's kind of
I expect a tough room for the regionals on their quarterly reports, given what's happened to regional banks over the last quarter.
Yeah, exactly. And the last one I want to leave with you, because I think this one could be an indication of our economy as well. And that's J.B. Hunt Transportation, the trucking company. They missed on earnings as well and revenue. They missed. They came in at $1.81 versus $1.92 expected, and they missed by about 0.2 billion in revenue. So their things are slowing down on that front too. They're trading up though, even though all that's happening, they're trading up 2% right now.
Well, better than some folks on the market expected anyway, right?
Exactly.
Evidently. Recapping it, yesterday was a big up day on every single index on Wall Street, and the VIX is now sitting still at 13 1/3, and that's still inordinately low, especially during earnings season. You expect more movements than that. 45 minutes before we open this morning, what are we looking at, Phillip?
We've been bouncing between the red and the green pretty much all morning, and things started trending down when the housing numbers came out, but now they bounced back up to a very light tinge of green. We got the Dow up less than $2. We got the S&P 500 up $3, and you got the NASDAQ 100 up 0.25%. It's the big winner right now. So yeah.
Let's go take a vacation in the Bahamas on that, shall we?
Exactly. We got silver making still a big leap today, up 0.5%. Still well over 25 at $25.38 an ounce. Gold is flat right now, and crude oil is heading up 0.7. I'm not liking this number, Dave. $76.19 a barrel right now.
Ouch! I did read somewhere that's heading toward 80, and I didn't like that news a bit. Overseas markets, the Asian rim was a true mixed bag. Taiwan was up by down by 0.2% at the close this morning. The mainland Chinese market was up fractionally, and Japan actually had a party. They were up about the kinds of percentages we were up, over 1.2%. Europe is evenly, for the most part, up fractionally halfway through their day today. Keeping tabs on retirement, you need more than just day-by-day numbers from us. You need to have a plan. How do I find you to get a plan to make my retirement happen, Phillip?
You're exactly right, Dave. And less than 70% of the folks out there, I should say more than 70% of the folks out there, don't have a plan in place for their retirement. That's why I developed the Core Retirement Design. Give us a call, 382-0037 to schedule your core retirement design, and then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And us back together again tomorrow morning here on Light FM. Phillip, thank you so much. We'll catch you then, all right?
All right, man. You have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Folks, again, I want to thank you for joining us today. Halfway through the week, hope it's going well for you. Join us again tomorrow, same time, same place. Until then, have a great day. Bye now.